GSPL slides 20% after PNGRB cuts tariffs for the company's key HP pipeline network. PNGRB tells CNBC-TV18 that it is only an adjustment in tariffs and not a cut. Meanwhile, GAIL too comes under pressure after the PNGRB adds that there would be revision in tariffs for GAIL as well.
Oil marketing companies HPCL, BPCL and IOC, they surge on the back of softer crude oil prices. Brent trades around $86 a barrel as geopolitical issues ease out a bit.
Hindustan's zinc climbs nearly 5% after reporting an inline set of numbers in the fourth quarter. The management tells CNBC-TV18 they expect the cost of production to dip towards $1,000 per ton. Also add that there was no fresh proposal to buy Vedanta zinc shares.
RK Forging slips close to around 1% now as the company's supply agreement with top US electric vehicle maker has been put on hold. Hello and welcome to Chartbusters. Well, as we speak, as you can see at the top of the screen, all the indices are trading well in the green. But what it's not telling you is we've come off considerably from the high point of the day. The good news, though, is that the number of stocks advancing are way more than the number of stocks are declining. So that's why your portfolio must be feeling quite good. On the Nifty, the 20-day MA is the one that's proving to be a bit of a problem point. Mangalam.
Absolutely, Nigel. You know, we saw a near 300-point, 350-point recovery on Friday, and thereafter we opened well as well. So that was perfect for, some of the bears to go ahead and short the market, or maybe for the bulls to book some profits after the sort of rally that we saw from the lows itself. The good part is that we haven't fallen much, still holding about 100 points in the green for the frontline index, with the midcaps doing better. So that sets us up for an important week as well, which is an expiry week, and we have a bunch of numbers coming in from the Nifty, starting with Reliance today and the reactions to HDFC Bank today as well. Shivangi Sada from, joins in for a quick technical check on the market. Shivangi, we've recovered a fair amount from the lows of around 21,770. Thereafter, now, where do we go for the market?
Good morning, Mangalam and Nigel. Thank you for having me. So we have seen that there has been a quite strong action from the bull side in the last two sessions. Even after a gap up opening today, we are seeing some sort of, slight consolidation, some sort of weakness. But then again, overall structure remains positive. India VIX is down by another 3.5%, which indicates that bulls are comfortable and making their position, as put writers can be seen increasing their base. Of course, we are entering into the expiry week, so volatility cannot be ruled out. Monthly expiry week. So, of course, we will expect a volatility, but then again, 222 would be a crucial make or break level over here. And on the upside, we are expecting 22,500 immediately, and then 22,750 on the cards. On the flip side, the support exists at 22,000 zones. Now, talking about Bank Nifty, we have seen that, of course, heavyweight, can be seen acting on the index today. But then again, we've seen some sort of weakness from the intraday highs. Bank Nifty is comparatively, underperforming as compared to the broader market on account of some of the consolidation in the PSU names. Overall, we are expecting range-bound to positive move over here. And the next levels that we are looking at is 48,250 with a support of 47,250 level.
Got it. Okay, that's your call, Shvangi, on the headline indices. What about individual stocks?
So individual stocks, first on my radar is Escorts. This entire space is buzzing in action. And we have seen that this stock has come out of its consolidation of the last 10 sessions. Hovering above its 50 daily exponential moving average, this stock is now showing positive crossover on the RSI front as well. Good amount of volumes have been added over here, and this series so far, we've seen a good short covering move in this stock. So overall, this stock is expected to move and extend the move upwards. So recommending a buy here with a target of 3,300 and a stop of 3,100 levels. Second on radar is Cummins India. This stock has also shown, signs of consolidation and is now getting ready for a good breakout. With the kind of sustainable volumes adding over here, this stock is set to, trade in a fresh leg of rally. We have seen that on a week-on-week basis, the steady movement in the stock is going to, remain sustainable over here. So recommending a buy here with a target of 3,250 levels and a stop near 3,050 sold.
All right, Shivangi, thanks a lot for joining in and giving us your views on the index as well as a bunch of individual stocks as well. Just before we let you go, any view on Pidilite that you have? Because that stock seems to have picked up a little bit. Fairer oil prices not doing too badly for them as well.
So Manglan, this entire space has not really performed quite well in this series, but then we've seen sort of a negation over here. On week basis, the stock is negating its lower highs formation. With a slight momentum in the stock, we could expect a up move towards around about 3,000 levels. But then again, it will test a lot of patience.
All right, take that point. Thank you so much. With that, let's shift focus to our special segment. We get you ideas of profit coming in from our colleagues at Money Control Pro. Khushbu Rai Gupta joins in with a stock that she's been tracking.
Today's idea for profit is Repco Home Finance. The company's established position in South India, especially in Tier 2 and 3 cities, offers strong pricing power as the focus on niche, small ticket and non-salaried home loans generate higher spreads. The asset under management is guided to reach Rs 20,000 crore with the potential to rise by another Rs 5,000 crores by FY27. The ongoing business model upgradation will boost loan growth and credit quality going forward. The structural changes by the new management are proving fruitful as the company witnessed healthy margins, better asset quality, and consistent improvement in return on assets sequentially. Also, if we look at the stock performance, Repco has outperformed most peers and saw a sharp rally in the past 1 month. Given the rural focus, the company will also benefit from the strong policy thrust towards affordable housing finance sector. Moreover, Repco's valuation at 0.7 times FY26 PB ratio is undemanding even after the sharp rally, and given the favorable risk-reward ratio and strong sector tailwinds, we see a further stock upside in the medium term.
Right, Khushbu, thanks a lot for that. Take a short break, come back on the other side. The management of Man Industries will join in to discuss their recent approval for pipeline and coating business coming in and the business outlook at large as well. Stay tuned.
Welcome back. Well, Man Industries, that's the next company on our radar. The company has received an approval for Shell Global for external, internal and concrete coating of steel pipelines in Gujarat. To understand more about this, we have Mr. Nikhil Mansukani, who is the managing director of the company, who joins us on the show. Hi, Nikhil. Good morning and good to see you, Ben. Give us a few details about this deal that we have announced on the stock exchanges with Shell Global. You've got a pipeline coating contract as well, is what you've mentioned. You've got approval for that. Is this a new deal? Because Shell Global, I think, was already part of your client list, right?
Yeah, so Shell Global is a part of the client list, but basically this is the value-added service of coating. So there are multiple types of coating, but we were not qualified. And they have a recurring AVL. So every 5 years, you need to get qualified again with them so that you can bid for the tenders which are coming for the future 5 years. So that had lapsed, and then we had to get additional coating services, which we have the CWC for the underwater pipelines. So we recently were doing the testing for all of those, and now we have got qualified for those 3 type of coatings, additional 3 type of coatings as well. Okay, all right. Do you all normally announce this, Nikhil? Because it seems to be pretty much normal course of business, right? They were a client, that 5-year renewal. So in the past as well, you all have announced it? Yes, we have. Okay. And it's important, like, the likes of Total, Shells and Chevron, these are important for us because once we are on board their AVL, our bid book obviously increases, and then we can be more aggressive and try and get more orders from them. If you're not in the AVL, you don't even get the RFQ for the order. So that's why it's very important.
Got it. So, the renewal of this contract, if you could tell us, the last 5 years, what was the revenue that you got from Shell? And this renewal entails what in terms of incremental revenue, if at all? So revenue for Shell in the last 5 years would be approximately, we've done one order, which would be approximately around $50 million. But then the coating bit was obviously lesser, would be approximately $10 to $12 million because that was pipe and coating.
But what happens is there are a lot of new orders of Shell which they are announcing and they are coming up with. And this was important so that we can bid for those orders. If we were not qualified, we won't be able to bid for those orders. So looking at the global market, it seems very important for us so that we can bid at least for those orders.
This $50 million is over the last 5 years, right? So that's roughly 80 crore per year. And the next 5 years, what exactly could your bidding pipeline be? Because you said that now it enables you to bid a lot more. How much higher can it go? Could it be around 75? Could it be 100? Could it be 120?
So it's not a constant business that is given. This is probably one project. So we keep bidding, looking at where the projects of Shell are coming. And accordingly, we get the RFQ. We bid for that particular specific project. And if we get that project, it goes over 6 months to 1 year to 2 years completion. So you can't put an exact number, but we are bidding some projects of Shell right now. So we are hopeful that once we get that, then we can give you a better idea on that.
Okay, so 50 million in the last 5 years. Out of that, 10 to 12 million was the value-added products, which is the coating part of the business. And we can at least take it on board that the next 5 years will be far better than what you have done with Shell for the last 5 years. Yeah?
Correct. Yes.
Should we expect it in that vicinity of 70 to 80 million?
So we don't know. There are larger size orders also. So
could it be more than 100 million?
Yeah, it could be because there are multiple orders going on. So whichever one we go aggressive and get the order accordingly.
Okay. Do you want to put a amount of bid pipeline that you have with Shell, or it will be too speculative?
Not with Shell, it will be too speculative. But overall, the bid book is around 9 to 10,000 crores today.
9 to 10,000 crores.
Yeah, the order book is approximately 2,100 crores. Unexecuted order book as on date is around 2,100 crores. So company's outlook is quite good. We are looking at a growth platform of almost 20-25% this year as well. Last year, the top line grew approximately 40%. So the overall outlook looks quite positive, and quite a lot of projects which we are bidding. We are quite close to and hopeful to get the orders as well.
So revenue growth of 20-25% is for FY25?
Yeah, for 25.
And you want to give us a brief number in terms of margins, because now you're entering, the ERW business, the seamless pipes business as well. Those are better margin businesses. So you want to put a number to that?
No, so we are an EBITDA approximately 10 to 11%. And ERW is obviously just started. We got the API approvals. We already got a certain amount of orders already in that, and we are going aggressive. But obviously, it's just started, so it will take its time and course. But we are pushing that business forward, and we've got a decent amount of order book already for that. The overall outlook looks quite positive for the company. Like I said, 20-25% for this year. The EBITDA margin will be very, very under control, such as between 10 to 11% even for this year.
What about seamless? How much would that be as a percentage of your sales?
So seamless is, we are putting the stainless steel seamless plant, which is under construction yet. So that would not contribute to 24-25. It would contribute from 25-26.
Okay.
How much?
It would contribute for the next year.
How much?
It's under construction currently. Between 800 to 1,000 crores of top line. The EBITDA of that business is different. It is almost between 15 to 20%.
Got it. Yeah, that's going to be the big kicker, right? The seamless pipe division, because that will boost up your margins as well. Give us a few more details. You were looking at, relocating a plant to the Middle East, I think so, if I got that correct. Could you give us further details about what are the plans with regard to the Middle East?
Yes, we have shortlisted. We have got the allocation. Once the final paperwork is done, we are starting the construction. We are shifting a couple of our plants from here to the Middle East because we see there's a bright future over there, and the next 10 years are looking quite good. And that would also optimize our utilization, which is very important, So that would give us a better overall outlook, and plus globally we will be placed. So there would be a much bigger kicker coming in for us for the next 2 years then.
So what exactly is the current capacity utilization? When it increases, what does it be?
So current capacity utilization is between 40 to 50%. And once the plants are shifted and they're operational in the Middle East, it will be approximately 65 to 75%.
No, even more. What's the peak capacity once it increases? What's the peak revenue potential?
So peak revenue potential would be approximately a top line between around 7 to 8,000 crores.
Okay,
for
all
both
right.
for the India and the Middle East put together.
So the total revenue potential is 7 to 8,000 crores. This is for the year FY26.
No. For both put the plants together for the Middle East as well as for India, the total outlook for the next 3 years, we could reach up to 9 to 10,000 crores of top line with these two plants.
So by FY27, then you should be at around 7 to 8,000 crores.
Correct. That's our target goal, and that's what we are focusing on. Correct.
Did we get that number correct? For FY27, it should be around 7 to 8,000 crores.
Correct.
Right?
Yes.
Couple of more details. Exports is a percentage of the mix. How much is it and where is it headed?
So majority is exports, almost 75% is exports. And most of the business is coming currently from the Middle East, a little bit from Africa, and also Far East.
All right. Just a couple of questions. One, because of the fundraising that you recently did, promoter stake has come down. So what's your outlook on increasing the promoter stake further from here? And secondly, last year your cash flow from operations were negative. At what point do they turn positive?
They'll be positive this year.
They'll be positive this year. To what extent?
Positive this year. And also for the equity bit, every year we have, if you see last 2 years, 3 years, we've always, every year we are issuing and buying equity almost 5%, which is the quota. So this year our target is the same. We will be buying 5% again very soon.
And Nikhil, those are the warrants, right? That will get converted.
Yes, correct.
I mean, it's been a good move actually out there because, the warrants would obviously at a sharp discount to the current price. So you'll definitely go ahead and put the remaining 75%. 25% I'm guessing you've already put on the table. And the remaining 75% is what you put. Just a final word, normally when we get you post numbers, we can't talk about this real estate part of the business as well. I understand that there are some cash flows that will come from there as well. Just tell us, where does that stand? How much will you get?
So we have a real estate asset in New Bombay, which we are removing. And the company is going to get approximately 500 crores over the next 5 years for that.
And is that the only real estate that you have, or is there more?
Yeah, that's the only real estate in the company left. So, and that also we are at the closure level now. So hopefully very soon we would be out of that. And then that cash flows will be coming in the company for the next 5 years.
Okay, all right. Thanks a lot, Nikhil, for stopping by. You're sounding fairly optimistic about business. We're going to hold you at these numbers. You're changing your product mix. That's what's going to help you in terms of margin profile. By FY27, you get to 7 to 8,000 crores odd, and you're sounding reasonably confident on the bid book as well. Wish you the best, and we look forward to chatting up with you post your numbers. Well, for the time being, I think just take a look at the stock. It's moved to the high point of the day as we speak, up close to around 4.2%. Time to slip into a short break. Come back. We continue our focus on markets and on stock-specific action. Don't go anywhere.
Welcome back. You're watching us here on Chartbusters. A couple of stocks from the broader markets have spiked up. Exide continues to move higher, so that's up at the high point of trade. And apart from that, we have a big move which is underway on ABFRL as well. It's about 2.5% right now, but it's happened in just the last 15 odd minutes. Over the weekend, the company did give us an inclination or an indication on how the demerger for their businesses will pan out, and importantly, how the debt will be split. So the current entity will have about 1,000 crores of debt, and the other one will have about 2,000 crores. And on that, the company would raise about 2,500 crores of equity as well. So those are factors that the street is weighing in on. But let's talk about another Nifty heavyweight that will be reporting its numbers today, that is Reliance Industries. Sonia joins in to tell us what we can expect.
Well, Reliance Industries is all set to report their numbers, and we are expecting a stable set this time around. Let's take a look at the stock first. It's been a very good performance for Reliance Industries. The stock is up almost 30% in the last 6 months. In fact, in the month of March, the stock hit a fresh 52-week high as well. Now, let's go across and see what you can expect from the numbers this time. A decent set of numbers. So 2.35 lakh crores is what we're expecting on the top line, slightly higher than what they did last quarter. On the margin front as well, we are looking at the EBITDA to fall just a tad bit, about 2% or so, while the margins will be stable at that 17% mark. On the profitability, a double-digit up move in profitability is what the street is expecting this time from Reliance Industries. The core business is something that has done well because of higher oil prices, a better refining margin, and hence that will be the key driver for Reliance Industries this time, an improvement in the core refining margins. If you move on and talk about, the quarter-on-quarter performance, remember the refining earnings were impacted by shutdowns last quarter. So quarter-on-quarter, this will look like a good performance. In fact, across the board, whether it's retail, whether it's telecom, there will be a sequential improvement in most of the businesses. In fact, in Jio as well, the subscriber momentum will continue quarter-on-quarter. We are expecting 10.8 million net additions this time around to subscribers, and a continued upward bias to oil is something that should drive performance. That's the word coming in from JP Morgan. In fact, JP Morgan continues to maintain an overweight on the stock. Standard disclaimer, Reliance Industries owns the channel that you're watching.
Thanks for that, Sonia. We'll keep an eye out on those set of numbers later today. But let's focus on Persistent System. Well, the numbers didn't look too bad, but the stock is under pressure. Rima joins us to run us through why that stock is under pressure. Well, Rima, I think the street didn't like what the management had to say, and valuations as well fairly elevated. Please go ahead.
Absolutely. So Persistent's Q4 numbers are good, in line with expectations. The company's revenue growth is above 3%. They've ended FY24 with a top-line growth of 14.5%. But what may have disappointed the street is the margin guidance. Now, the company held an analyst call at 8 a.m. in the morning where they said that during the next 12 months, given the challenging macro environment, our goal is to maintain top quartile growth while maintaining margins at the current level. So one, they're acknowledging that the environment remains challenging. Two, it appears that they're prioritizing growth over margins. And three, the most important thing is they're guiding for flat margins in FY25. Now, the street was hopeful of some margin expansion next year. I went back to the post-Q3 brokerage notes, which came out in January, and these are the numbers. As I said, these are 3 months back, the numbers that came out. Kotak was anticipating that FY25 margins will be at 14.9%, Nuvama is at 15.7%, and now it appears that FY25 margins will be similar to FY24 margins of 14.4%. So there could be some cut in the street expectations of the margins. Also, the company about a year back had said that our medium-term aspiration is to improve margins by 200 to 300 basis points. They didn't say medium-term is 2 years, 3 years, 4 years, but it does appear that 1 year down the line, since we haven't seen that margin improvement and next year we're not going to see it, maybe that gets also pushed forward. On demand, in the conference call, they said that the demand environment is exactly as it was 2 to 3 quarters back. But another factor for Persistent is because it's been such a fast-growing company, right? It's run up a lot. In the last 3 years, the stock has tripled, 300% up, and the stock trades at elevated valuation multiples compared to peers at 35, 37 times. Back to you.
Right, Rima, thanks a lot for that. Well explained. No change in demand scenario, margins below what the street was anticipating, and a run-up in the stock price, leading to that decline that we're seeing on Persistent despite good numbers. With that, we are out of time on this edition of Chartbusters. You stay tuned. Rima and team will take it forward with Trading Hour.